and welcome to another TU-Automotive webinar. Today's webinar has been produced as a precursor to the 7th Annual Connected Car Insurance USA Conference and Exhibition, September the 6th and 7th in Chicago. Today we are going to be addressing auto insurance, mastering digital transformation and moving at a startup pace. So the context for this webinar, the insurtech space is booming, and with it comes alarm bells for insurance carriers. These startups are looking to capitalize on a shift towards digital technology in the insurance industry. If insurance carriers continue to be, quote, slow to react, unquote, then they risk losing out to these smaller and more adaptable players. So I'd like to introduce our panel of expert speakers for today's interactive webinar. They are Marielle Devesa, Head of Innovation, Farmers Insurance, Ali Safavi, Director of InsurTech with Plug and Play Tech Center, Mike Simmons, CEO, Driveway, and Gary Organ, President at Arity. We will hear 3 presentations before moving into poll questions where you, the audience, gets to cast your vote on some of the big questions in this field, before handing back to our experts to give some insights on those results. So when we do have the poll questions, please, our audience, be active in making your vote. If we Hi there, and welcome to another TU-Automotive webinar. Today's webinar has been produced as a precursor to the 7th Annual Connected Car Insurance USA Conference and Exhibition. Today we are going to be addressing auto insurance, mastering digital transformation and moving at a startup pace. The context for this webinar is that the insurtech space is booming, and with it comes alarm bells for insurance carriers. These startups are looking to capitalize on a shift towards digital technology in the insurance industry. If insurance carriers continue to be, quote, slow to react, unquote, then they risk losing out to these smaller and more adaptable players. So I'd like to introduce our panel of expert speakers for today's interactive webinar. They are Marielle Devesa, Head of Innovation, Farmers Insurance, Ali Safavi, Director of InsurTech at Plug and Play Tech Center, Mike Simmons, CEO, Driveway, and Gary Hallgren, President of Arity. We will hear 3 presentations before moving into poll questions where you, the audience, get to cast your vote on some of the big questions in this field, before handing back to the experts to give us some insights into those results. So our listening audience, please be active in casting your vote when those poll questions appear. If we have time, we will also take some questions from you, the audience, and you'll have the opportunity to pose them using the chat function in the GoTo system. So please do be proactive in sending those in. So without further ado, I'd like to introduce our first speaker and presenter, Marielle Devesa, Head of Innovation at Farmers Insurance. Marielle, I'll hand over to you.
Great, thanks so much. Thanks for having me. I'm really happy to be here. This is a really exciting time. There's enormous change that's coming our way, and with change that brings opportunity. So excited to have this session. But first, wanted to give a quick overview of Farmers, which we are one of the largest. By the way, so my name is Marielle Devesa, as Emil said. So I head up product innovation and corporate development. And Farmers were one of the largest P&C carriers in the United States, so property and casualty. We are based in Los Angeles, so we're based in lovely Southern California. We're going through a little heat wave at the moment. But our primary lines of business include auto and home. We also do small business, other insurance products, as well as financial service products. So we proudly serve more than 10 million households in the United States. That means translates to more than 19 million policies. And we have great strength within our agent distribution channel. It's comprised of more than 48,000 independent and exclusive agents. And we're recognized as one of the largest U.S. companies within the 2017 Fortune 500 list. So now let's talk about our approach with startups. So for us, it's definitely about identifying great companies that we can work with, and we do this through multiple channels, including accelerators, universities, conferences, and those that reach out directly to us or that we reach out directly to them. And we look for companies that we can leverage within our existing business structure, ways that we can create new businesses, improve efficiencies, and also add value to our customers. Let's go through a couple of examples that we've just recently launched. So earlier this year on the upper left, you'll see we launched Signal, which is our first telematics offering in Arizona. It's a smartphone solution in which we were the first carrier to include phone distraction in our pricing models. And we worked really closely with Driveway to develop and launch a very customer-focused program. And Driveway is also on the phone today. And we also mentioned accelerators. And so Plug and Play, which is you'll be hearing from Ollie next. We worked quite a bit with Plug and Play, and it's been a great relationship. And we've seen some very, very good companies come out of that. And we work with them both in Silicon Valley and Los Angeles. And we also look for companies that add value for our customers. So earlier this year, we also launched a mobile roadside assistance program. So we're working with a local Santa Monica startup called Honk, and we've been having good feedback from that. And sometimes programs can start very small. So we also are working with a startup called Test Loop. So it's a company that does city-to-city transport in Teslas. It's a great company, great concept. And yet it's a different model than traditional livery. And we met them when they were a one-car concept. And we've worked with them to develop programs and products for them. And for farmers, it's really about understanding the business model, being flexible to create new programs when they're needed, and how we can best address the needs of our customers. And this was really evidenced in our leadership role within rideshare as well. This was a couple of years back, but we were the first mainstream carrier to launch a product for rideshare drivers. And it was very much about understanding the disruptive companies out there. We had a really great relationship with Uber and understanding what the needs were to create a product, but not only to create a product, but also to create a regulatory language that would enable our product to be offered, and that language has now been adopted by most states in the U.S. So now working with startups and corporates can be both challenging and beneficial. So some of the challenges that we see are sometimes working with insurers, big established corporations can be a little bit more complicated than you'd like. Sometimes it can move a little bit slower than you'd like. And sometimes also the culture of some companies can be, when you're dealing with companies that have a culture that's been established for decades and some moving into the century mark, that can also be a little bit more resistant to change than a startup. And so getting comfortable with the existing process and changing it is something that we constantly work at. But now the positive part of working with startups is that they generally have a much faster speed to market. Also, the company culture is an asset because it is very much a can-do culture, which can be both motivating and inspiring. And it is a method to be able to bring in new ideas and fresh perspectives. So in summary, what do we see? I mean, change is coming, so get ready, it's on its way. And so some of the things that we would recommend is to definitely carve out time to work with startups. That's a very beneficial situation. And also start changing the culture, being more open to new ideas, new concepts. And I think one of the biggest things is also to celebrate both the wins and the failures as we go through this process. And with that, I think, Andy, it's back to you.
Thank you, Marielle, for that presentation. Marielle, if you're still there, just a quick question. You're obviously going to be coming to Connected Car Insurance USA 2017 this year, and have been coming along for a number of years. Just a quick question. Why is it that you attend the event, and what do you hope to get out of 2017?
Yeah, I mean, I think the event has been really beneficial to get an overview of what is happening within the industry, both from the insurer side, from the service providers, and then as we start to see more other parties that are in attendance from startups and OEMs. I think it's always a great event.
Fantastic. Thanks very much. I'd just like to hand over now to our next speaker and presenter, Ali Safavi from Plug and Play Tech Center. Ali, if you're good to go, then I will hand over to you.
Hi guys, thank you for having me. I'm Ali. I run the insurance program in Plug and Play. I'm also a principal with our ventures team, being involved with the sourcing process, meeting startups, and basically being the liaison in a lot of cases between incumbents, VCs, and startups. So let me just explain a little bit more about what Plug and Play is and where do I stand in terms of the whole ecosystem of innovation. Basically, we started really early on. This is a picture of Google, early days in Palo Alto, University Avenue, before even Plug and Play was born under the Hamilton Group as a working space. We pulled in some other companies like PayPal, Danger, Logitech, and that was the way that the founders of the company started investing in tech startups. And the main philosophy and the mission statement that we have is that we believe that innovation should be open to anyone and anywhere. So we work with, on the corporate side, with many corporates that in some ways they compete. On the startup side, we do the same. And the value is that, the main value that we're trying to create is that we're trying to create this ultimate startup ecosystem. Our philosophy is that the entrepreneur needs to be focusing on one thing, and that should be his product, and not to have to go knock on doors for 6 months to 10 months, to find the right person in farmers, for example. By us helping there and also helping them remove a lot of friction in terms of finding capital for their venture, we believe that the startup could progress a lot faster and it could grow a lot bigger. So at the end, what we do is that we accelerate and invest in startups, but we don't take any cash or equity from them. It's completely free of charge. But if we decide to invest outside of these acceleration programs that we have, we do it similar to any other investor. And that at the end of the day is the main reason we do everything. On the investment side, we've invested in 700 companies in the past, I would say, 10 years, but over half of these companies are just from the past few years. And we run these acceleration programs across 12 industries now, and we do them 2 times a year. We also have this large ecosystem, or what we call innovation platforms, that we work with startups, corporates, VCs, software solutions, anyone who could bring value to the startup ecosystem across all these different industries. And overall, we work with roughly now over 8,000 startups and over hundreds of corporations in these innovation platforms. We also do have a large working space in Silicon Valley. We also have 25 locations around the world that I'm going to explain a little bit more about. And we have hundreds of events every year across the locations that we have. These are some of the companies that we invested. I'm sure people know Dropbox, PayPal, Lending Club, SoundHound, a lot of success stories. And as I mentioned, we try to provide as much as we can for the startups, from networking, corporate innovation, logistics, and even data centers that they could use for hosting their applications. And some of the industries that we are active in, you could see we started with brand and retail in 2013, then we did fintech, and last year we launched insurance, which now actually is our biggest program in terms of the number of corporate partners that we have. We recently just surpassed our 50th partner. And we're global. Not everyone is American. We have many Japanese partners, German, French, and you could see some of the biggest corporates we work with across the industries. And there's a huge amount of overlap between mobility, insurance, fintech, IoT, and that's one of the reasons that the insurance program grew fast, was that we actually had the experience of all these verticals and the resources that they provide to launch it. And one thing that we learned really quickly was that insurance companies are interested in anything, being new trends in mobility or being a new way to prevent risk in a commercial building for our IoT vertical. And these are some of the offices that we have. The headquarters is Silicon Valley, which gives us a good scope in, in the heart of technology. And a lot of our corporates, like farmers, come in and look at startups through what we call deal flows. And the startups that they see from the ecosystem of thousands of companies are based on specific business unit problems rather than just random startups that we invested in. And we try to source from the VC partners, universities, active sourcing, many, many different places. And the startups that we work with are completely stage agnostic, anywhere from seed stage to growth stage, just because, a lot of times partners need immediate wins rather than technologies that are new but are moonshot and need time to grow. So in terms of the insurance, we have partnered with over 50, as I mentioned. Farmers was actually one of the first partners that joined. I personally have a really good relationship with the Farmers people, and we really respect them because they have engaged quite a lot with our ecosystem. In terms of what they're looking for, the corporates, I would say I usually like to categorize it as product innovation, improving the insurance products as they are today, new sources of risk, disruptive ideas, and the new source of risk, it's opportunity for new insurance products, and the disruptive ideas are mainly trends that could affect the insurance industry, like shared economy. On the product innovation side, there's user centricity, underwriting, mitigation of risk, and cost reduction as the 4 biggest categories that I would look at. And if I want to give an example of how a startup could affect the insurance business, I want to give an example of this company that we just invested in, Arity. It's an autonomous shuttle that is active in Santa Clara University here in Silicon Valley, and you could see the video online. But a technology like this could have a huge impact on the insurance industry in various ways based on the categories that I just mentioned. One, it could be a new service to provide to the users, like roadside assistance, similar to what Farmers has done. It's not necessarily insurance, but it's a good experience for the customer. So we're providing some kind of solutions like this. A lot of times, for the commercial properties that insurance companies insure, this could be additional value. Then because of the sensors that these robots carry, there's a lot more data to be used for underwriting, so a lot better way of understanding the risk. Also, this robot was recently insured by a large reinsurer, and that shows that there's opportunity for insuring new products with, autonomous cars come in and all these new trends. Everyone is looking to diversify their risk and looking for new products, and these kind of technologies could be it. And at the same time, the whole trend of shifting the liability in transportation from the driver to the OEM is another big topic that could affect the industry. In general telematics, we've seen a huge growth in the past few years. This is a chart that I borrowed from Evogi, as you could see. And if I want to say some of the just few startups that I'm excited about, and I know Mike is going to talk about Driveway, I usually categorize the telematics solutions in mainly hardware versus software, which on the hardware side, you have companies that do dash cam with a lot of context around how the accident happened, obviously a lot more costly. Similar to Nato, you have OBD, OBD2 devices, similar to Mojio, which have started working really significantly with telcos for providing telecommunication, but at the same time driver analytics. And then you have companies who do plugins, which don't give a lot of analysis on the condition of the car, but allow for some kind of ways to analyze driver behavior. And then on the software side, I'm sure you're going to hear more about Driveway, just companies who do pure sensors. And then you have companies like Nexar who use sensors plus camera, which gives more context around how the accident happened or what are the conditions that the driver is driving around. And then you have companies like Amodo, which are more focused on creating it and gamification of the experience and becoming a legion to many of the insurance companies rather than just being an SDK. And a lot of this is cross-industry between insurance, mobility, and telcos. And also another big trend that we saw last year was a big shift from personal lines to commercial lines across multiple different technology areas, not just mobility, but in mobility was even more significant because especially when it comes to hardware, people realize that it's a lot easier to use them in the underwriting process and the customer experience on the fleet management side and commercial insurance side than personal lines, which was pretty interesting. And then now we're seeing a shift into the shared economy aspect of it, of switching on and off depending on how the vehicle is being used for what application. And there's also a big trend in the connected vehicles as a platform. This is the biggest push that I've seen this year, is that a lot of startups are pushing to become kind of similar to an iOS, but for cars, and to become that platform or operating system for many of the applications that could sit on top of them. And really quick, in terms of the corporate versus startup innovation, the biggest thing that is starting to happen now versus 2 years ago, where everyone was new to the space, is that now corporates and incumbents are starting to learn the language of startups. And hopefully with more and more exposure and more business units being engaged with startups, we're going to see even a bigger trend of integration. And another big topic that I saw this year was the fact that a lot of the technologies that were buzzwords for the past 2 years were technologies that were kind of sexy, but they were hard to integrate. And now I see a big focus towards insurance companies trying to build the infrastructure to be able to use these technologies, which that itself could definitely help a lot with pushing the industry forward. I think I went a little bit over time, so I apologize. Thank you for giving me the time.
No, that's perfect. Thank you very much, Ali. And to those listening, Ali will be personally at the Connected Car Insurance USA 2017 event in Chicago later this year, and we're going to be running a startup competition. So that should be really good, and hope you guys listening will be along to check it out. So moving swiftly along, I'd like to introduce our next speaker and presenter, Mike Simmons, CEO with Driveway. And Mike, I'll hand over to you.
Great, thanks. Let me make sure I get the right screen here. Okay, thanks. Yeah, let me know if it's not showing the right screen. I got 2 monitors up here, but yeah, I'm Mike Simmons, the CEO of Driveway. Thanks again for the invite. Great to be here. We're a relatively mature startup that works with big insurers, great companies like Farmers, to help them build smartphone-centric UBI programs and reward their customers for safe driving. So I'm going to try to bring a little bit more of the startup's perspective to this discussion. Try to use our experience as a kind of business case example of how startups and big incumbents can work together to introduce new and maybe disruptive technologies into the organization. So just to set a little context for the reason we're even having this discussion, there's this massive disruption underway right now in the insurance business, particularly in the personal lines auto business. You've heard that software is eating the world, right? I think a more specific application here is that data is eating insurance. We're in the early stages of this massive shift from proxy data to more powerful source data. And the insurance business was built on some pretty weak signals ultimately, and now data is really changing everything, right? More specifically, scalable access to really granular, really predictive data can enable insurers that know how to use it to build a big competitive advantage. So UBI is enabling this shift from weak proxy signals like age and marital status to real driving behavior data that's both intuitively and empirically highly correlated to risk and loss costs. So insurers who continue to compete on just proxy data, they're going to be eaten by the insurers who've adapted to more powerful source data. So this shift from proxy to source data is following a classic pattern of disruption that I think is worth unpacking a bit. UBI is really the most mature of the technology disruptions in the insurtech space. The first wave of UBI solutions came in and proved out that the value, there's really big value in the driving behavior data, but the early technology wasn't really what the insurers or the customers were looking for. And so another wave of technology has come in and is just disrupting the first wave. The way technology disruption usually works is in this S-curve model, right? Early MVP solutions that initially don't seem too threatening to incumbents, they improve and eventually obsolete the old technology. So you can think about this graph in terms of, like Blockbuster being disrupted by Netflix, starting to mail out DVDs, and then Netflix disrupts itself with the streaming business. Another S-curve, continues on. So this disruption cycle continues with a new technology S-curve until you get to the customer experience that customers are really looking for. So the question for big insurers is, when's the right time to jump off the blue curve and jump onto the green curve? And that's where partnering with startups can really help. So let's look at how this is playing out right now in the UBI space. You still have the preponderance of UBI customers on some sort of OBD solution right now, but insurers have known for a while that it really doesn't scale. Some insurers have just kind of sat it out for this reason. The problem is it's a really tough customer experience, right? Mailing a device to a customer, having them climb under the dash, play mechanic, drive it for a while, unplug it, mail it back. It's kind of a non-starter. But that's how a lot of disruptive technologies start. They do things that don't scale to prove out the model initially. And then while that's happening, somebody else is working on the technology to disrupt the existing model. That's kind of where Driveway comes in. Before anybody thought it was possible, Driveway was working out the technology to make it all work from the smartphone. So now all of that process that you saw on the last slide is replaced by a simple text message. And then with a few taps on your phone becomes your connected car device, automatically starts capturing driving behavior data, giving feedback to customers on a platform they're familiar with on the smartphone, even adds critical data insights that weren't available in the first generation of the technology, things like driver distraction. And this enables the insurer to translate all that into fair and transparent pricing. And now that there's no expensive hardware to amortize, you can stay connected to the customer over the long term, the life of the policy, improve the customer experience, help customers when they need you. You can even help make the car ownership experience better through other connected services. So the UBI experience is a really good example of how it can make sense for an enterprise to work with startups. A nimble startup can help you be a first mover to kind of do things that don't scale, or you can wait a little bit longer and they can help you be a fast follower, wait until all the technology problems have been solved. Either way, you need a strategy for innovation. You need to create some room to fail because you can't innovate if failure isn't allowed in the building. So I've pulled together some lessons learned from my travels in the space, working with a bunch of big insurers at multiple startups, and some thoughts on what insurers should look for in a startup partner, and then some thoughts on some pitfalls that startups should look out for in a strategic partner. Incumbents, first and foremost, should make sure objectives are aligned with your startup partner. Got to make sure that their ultimate goal is to solve a problem for you and not to try to steal your customers in the future and displace you. You need to make sure their technology is the real deal. There's a lot of startups, early stage, still some vaporware out there, so you have to kick the tires. You should look for domain expertise, right? You're looking to them typically for technology, but if they don't know the insurance space, it's going to be hard for them to learn how to understand how to apply the technology. You should value battle scars. Take advantage of lessons learned anywhere you can, and just make sure they have a viable business and they've got committed investors behind them. You're probably a big part of their revenue stream too. So before you squeeze too hard on negotiations, remember you want them to stay healthy. And then some of the pitfalls that startups should look out for in dealing with big corporates. None of these apply to great companies like Farmers, obviously. These are some other travels in the space, but there's a common thing in insurance I call pilots as a service. You have to look out for companies that typically don't, they have a not invented here policy maybe, and if they're asking you to do pilots, you got to make sure that they actually end up doing some business with startups down the road. Some folks are out there, mainly to learn sometimes, so you have to watch out for that. Related risk, I call the science experiment. You might make it onto their innovation platform, but there might not be enough volume on that innovation platform to make it worth it for you. They might never really plug you into real distribution, so just make sure you're not working for free ultimately. You should also look out for the faux sponsor. In some of these big organizations, it's hard to tell who's a real decision maker and who's not, so you need to find a sponsor that's real clout to make things happen. Exclusivity, should be really clear around exclusivity. You can build a business off of one customer, but it's usually not the best idea. Is it going to be okay if you work with a competitor in the future? If you have to go down the exclusivity path, try to limit it by time or location. And finally, be careful not to get seduced into doing irrational things because you want to get a big brand partner on your customer list. It can help you build the company, but if you strike the wrong commercial deal, it can also kill a small company. And so I'll just make one last point. There will be a next wave of disruption, right? In car insurance, it's the transition from car ownership as we know it to different versions of mobility as a service, right? There's going to be many different variants of it: car sharing, ride sharing, subscription services, probably some partial autonomy mixed in there over the next few decades. But data is going to inform all of these business models in the future. In particular, driver-centric data is going to be even more critical to building and pricing insurance products for these new mobility models. So it's something to keep in mind as you're looking for your next startup partner. So just to wrap it up, I'd conclude by saying, reminding you that innovation is risky, but not innovating is even riskier. So try to innovate around the edges of your business, then integrate what works. So with that, I will hand it back over to Andy.
Thank you very much, Mike Simmons, CEO of Driveway. So our final speaker and presenter will be Gary Hallgren, President with Arity. And I'd just like to introduce him. Gary, if you want to go.
Great. This is Gary Hallgren. Thank you for having me. I want to tell the story of. Let me get my screen shown. See the screen now. Want to tell the Arity story. There's certainly a lack of awareness as we just started this business in announcing Arity as a company in October of last year. So I'll use a little bit today to tell you about Arity and kind of our point of view on the market. From the startup perspective, we think of ourselves as a startup, and you think of us as a startup, but ultimately we like a 7-year-old startup that has 300 people in it. So in some ways, it's great to be in this mode, and certainly relative to our parent Allstate, it's startup size, but we're in kind of a mid startup period. I'm going to start with just thinking of our point of view on the transportation system, and fundamentally, we just believe that it is broken. That was if you look at how many vehicles are out there, the 240 million, we spend $3 trillion of annual cost on the transportation system. There's so much time in congestion. And when we look at it, we view this as the biggest opportunity really for the country, that if you reduce the overall transportation cost by 20% through efficiencies, that's roughly $2,800 for every household in the country. So that's 2.8 months of daycare, it's time for your mortgage payments, almost 3 months, it's vacations, it's everything else. And we think that right now is the opportunity to see that happening. It's changing really right around us. And as Mike just mentioned, car ownership, it is changing. To put your head in the sand and think that it's not going to is just a mistake. This is happening. Utilization, today the current utilization is 4% of the vehicles utilized at any given time. Nobody would ever design a system like this. Safety had been getting better. It actually has gotten worse in the last couple of years, but we know that is going to trend. We need to be more safe. It just isn't right that people are still dying on our roadways. And then certainly connectivity is enabling all this to happen. So we think about why Arity. What did Allstate do by founding Arity in this way? So we are not an insurance company. We are outside of that group. We live in a separate group similar to other emerging businesses that we have inside of the corporation. But Arity, the Allstate Insurance Company, is a customer, as is Esurance, as are the rest of the insurance industry, are customers of Arity. But we do have a background which is just strong and robust, not only having access to all the claims history and those programs, but we have been a pioneer in UBI since 2000 and have built a great team internally. I don't think we started with the intent of becoming a telematics company, but we ended up being a telematics company because this data we feel is just so important to that the industry is going to change in this way, and we want to be at the center of it. So when you think about what we are, we're definitely vast understanding of risk and creating models. We have engineers that work with everything from hardware to SDKs and the software to make it happen. We're a growing business. We've added 50, 70 people just in the last year and continue to grow. And we really focus on just taking sensor data from whatever those sensors are, devices, mobile, OEMs of the future, and bringing that together to create risk models that are better. Ultimately, it's to make transportation safer and smarter. So we are just a strong believer that as the transportation system changes, insurance companies need to think of the world fundamentally differently than the way they think about it today. And all of this will lead to safer for the consumers and smarter decisions for customers. So ultimately, just like in the rest of these disruptive technologies, it's been the ultimate consumer that wins. And we believe that these technologies that we're creating today, these models, just put more control in the hands of the users. So we think about risk and the journey that we've been on, that all the insurers have been on. It used to be that you would discover that if somebody had a lot of issues in the past, you would rate them higher, and we needed something that would be more predictive, and found that credit variables and other traditional variables actually correlated very well for doing that. What we're finding now through the work that we've been doing over the last years with we've been collecting a great deal of data, we're able to create models now that are better than these old traditional variables. So unlike other companies that I had worked at prior to Arity, where we had some ideas that they might be better, now we actually have the data to prove that out. And ultimately, what's really important is who's behind the wheel and what are they actually doing. I think when we look back in the years down from the future, looking back, we'll just be amazed at how we ever could have priced risk without actually understanding how the vehicles were performing and how the drivers are performing. But it goes much broader than that, because we really need to understand how these vehicles are interacting with other vehicles on the road, how drivers are interacting. Sometimes you're in car sharing, sometimes someone is driving your car, sometimes you're driving. And really understanding that risk profile is what it's all about. From the Arity standpoint, we've been doing this for, as mentioned, for a long time. So spent over 10 years collecting data, collected over 22 billion miles of driving data. We collect almost 1 billion miles of new data a month. And then just from the nature of how we started, we have unfettered access to all the claims data. So we've been able to create models that are predictive. We started with device models, which were very predictive, and moved into mobile models. We have mobile models now that are available in 48 states. And there's new models coming out that are even more predictive than anything we had really kind of thought possible. I think people have thought for a long time that the new models were going to be better than the existing variables, but we actually are able to prove that now at scale. And really, we think that once we discovered that the proof of that was there, that we needed to come out of Allstate, that it was important for the industry. It was important to take this data, kind of these algorithms out of the black box that was in Northbrook, and create a company that is bringing this to the market and help the industry accelerate. So when we think of our kind of solutions as what you need in order to make these happen, I think for all the insurers in the audience, a lot of people think of, well, I need a device, or I need an SDK for my phone, or I might need a score. But there's a whole lot more to making that all happen. So really what we've done is taken the people and the organization that you need to have in order to roll out programs at scale and bringing that together. So it certainly starts with a driving score, and you need to have one that is there and proven. It took a long time and a lot of miles and a lot of users to get the amount of information needed to have to be as predictive as you need to be in order to roll it out at scale, and we're there. We're also involved very much on the capturing and storing. There's been comments in the panel that we're moving from one to another. We don't really believe it necessarily has to be a transition. We think there is role for devices. We think there's role for mobile phones. We think there's role for OEM data. And I don't view it as one stops and the other begins, but I think there's opportunities for all three, really depending upon what other services you want to have. So by doing that, you think of complementing your services. So it's what is your value proposition to your customer? Is it about, I just want to get a score as fast as possible for the least amount of money, similar to just calling one of the credit bureaus and pulling a report? Or is your goal to create a long-term relationship with your customer, enable other services around claims, emergency services, other services? Ultimately, one of the big hindrances we've seen in the market is the idea of getting these through all the different DOIs. So we've created ourselves as a rating services organization and are going through the process of getting these rates filed throughout all of the country. So you'll be able to use SDKs or devices or work with your OEM, be able to use this score, and then be able to just subscribe to the states for using the Arity risk score. Ultimately, to kind of close it out, there was a time with credit where people decided that maybe it's not quite time. I think Mike just mentioned when's the time to jump on. And we view it exactly the same way, that those that jumped on early maybe had some scars as they went through it, but they were light years ahead of those that came on late in the program. And do you really want to be BlackBerry and where the iPhone kind of snuck up on them? And one of the other speakers mentioned kind of insurance being eaten. BlackBerry really was eaten by the iPhone. And I love the example also of the discs, and a lot of people talking about the wars of which HD DVD standard was going to win, and ultimately streaming won, and they were even just not playing the same game. So I guess in closing, I like the message of startups. I think there's a lot of things that we're doing that are much faster than what the big machines of organizations can do. And the advice of work with startups, learn, take it seriously, roll out programs is what's needed. And Arity is here to help you should you should like to talk to us. We'd love to talk to you.
Thank you very much, Gary. And Gary, just a very quick question. Arity are going to be a leading sponsor at Connected Car Insurance USA this year. Why is it that Arity are going to be coming to this event, and what do you hope to take away from it?
Well, it really is. I've been coming to these shows in Chicago for a long time, and ultimately it's the place where insurers come. For Arity, we're getting our message out. We have a lot of, like I say, we're a 7-year-old, 300-person startup that is rapidly growing, but Arity in itself is a new brand, so we're looking forward to meeting the industry, both other people we could partner with, meeting potential customers, and I'm looking forward to the event.
Fantastic, thank you very much. So now to our audience, we're going to be moving on to our poll questions. So the first poll question that we're going to be addressing is, what is the most important application for connected car data? And you'll see there we've got a multiple choice question. So to the audience, I'd say now is the time to cast your vote. So we've got option A, developing UBI products. Option B, developing mobility products. C, working towards connected claims. D, understanding ADAS capability of a vehicle. And E, other for those undecided. Whilst we open this up to the audience and let everyone cast their vote, it would be worth noting that, as Gary's mentioned, the insurance conference in Chicago is the place that insurance companies and carriers come to meet the ecosystem of connected car technology. We have Liberty Mutual, Farmers, Progressive, Travelers, Germania, the Hartford, USAA, State Farm, Selena, AIG, Plymouth Rock, Nationwide, VML programs, Metromile, CSAA, and Root already signed up. But with that, I'll close off the voting. I think the answers are in, and here we go. So there we go. We can see that developing mobility products is the winning answer. And I'd just like to go back to Gary to get your take on that. You were talking about the trend of mobility, and what are you taking away from those results?
I think it's right. I think anybody who is not looking right now at that trend in front of you, whether or not it's what kind of, if you are an insurer, what kind of programs do I want to have in order to foster that? I think that part of it is important. And then just looking at it from the user perspective, when we think about it as a company, we actually see that there's a lot of similarities of things that we can do for mobility companies as well as insurance companies. If you think of the core business that we have is feed us a bunch of driving data, and we can give you the best score that is possible, the best predictor of risk. And not only does an insurer want that, but the rideshare car sharing companies want that too. I personally want to know that my Lyft driver got 4 stars because he's a great driver and not because his car didn't smell and he usually gives people a mint. And I think that as we start thinking about how to apply these technologies, for those technologists in the audience that are working with insurers, I think there's a lot of applicability to mobility. And I think there's a lot for the insurers to just embrace it and don't put your head in the sand and think I'm going to ride out this wave and it's going to change. Let's as a community embrace it, and let's bring about the efficiency in the systems that we really can help these households save that money.
Thank you very much. And I'd just like to extend the opportunity to Marielle to cast your vote on. Sorry, to offer your opinion on those results. Farmers are obviously working and doing a lot of work in the mobility front. Does this give you confidence as to the work you've been doing and some of the work you've been looking at?
No, absolutely. I mean, fully agree with Gary's comments. I mean, we're seeing shifts in the OEMs are seeing it. I mean, in developing sharing platforms and new mobility structures and new ownership structures and the move to autonomy. You know, all of those things, the data that's coming from the car is going to be paramount.
Ali Safavi, working with Plug and Play. What are your take on the results? Do you see a lot of startups coming to you offering mobility products?
100%. I mean, the most exciting trend right now for me in mobility, it's in general vehicle to X or V2X kind of applications in terms of cars being able to share their information with objects on the side of the road, with other cars on the road, and eventually moving towards the way that, we could look at cars and as the logistics of transportation in general, so we could scale it a lot better, being a lot more efficient on the streets, and all those effects that eventually could, have an effect on insurance as well. But the most exciting thing is the whole concept of mobility being disrupted, not just vehicles themselves.
And then just lastly, I'd like to offer Mike Simmons the opportunity to just again make a comment of those results that you're seeing there.
Yeah, that's exactly the way I would have voted. I think, UBI in second place there is sort of the first wave of big impact was around UBI. The connected car data enabled it. And I think it showed how much you can really transform a business like insurance, right? It brings fairness, transparency. But as you look forward, clearly mobility products are going to be the big shift, right? It's just so exciting to be in this space at this time. When we started going to the Chicago conferences years ago, nobody was thinking or talking about all these changes that are happening in mobility. So it's amazing to really think about how fast this is happening. But it's all enabled by data. It's all enabled by connectivity at the most basic level. And just think about the profound impact that it's going to have on society, on everything, on the way we move around. It's really exciting time to be in the middle of this space. So, and I think ultimately it all starts with connectivity at its most foundational level.
Fantastic. So we'll move on to the second poll question for today's webinar. So again, to the audience listening in, this is a chance to offer your opinion, cast your vote. But what does being a digital-based insurance company enable? So again, we have the multiple choice options: greater integration into IoT, Internet of Things. B, flexibility to work, stroke compete with insurtech startups. C, resilience as tech giants and telcos enter this space. I think we know who we're talking about there. D, adaptability to trends such as autonomous cars, and I believe that's mobility. And then you have the sit on the fence option, which I hope doesn't get too many votes. But I'll let you, the audience, have a few more moments to cast your vote and select your answer of preference. So to the listening audience as well, I would say that if you are interested in coming to the Connected Car Insurance USA 2017 conference exhibition, there is a sales deadline that's actually going to be expiring on the 7th of July, so the Friday week after next, and you can save $200 on your pass if you register nice and early. That's just a little heads up. But yes, the results are in, so we'll just open those up and we can see how we have voted. Okay, so a very clear winner. So what does being a digital-based insurance company enable? The answer seems to be adaptability to trends such as autonomous cars and mobility. So I guess this is in a similar sort of vein. I'd like to offer the chance to Marielle to kick us off here. So again, that adaptability to mobility is something that's important, but also autonomous cars. What do you take on there? What do you take away from those?
Yeah, I mean, I think it's similar comments to the last question. I think that number one is that we have to there's going to be so much more data that's available, and I think that that's going to change how we think about pricing potentially and what products we can build. But also having a digitally based insurance company, it also enables more personalization with the consumer. I think that we also need to take into consideration, yes, there's a lot of data that can be captured, but then what does that then provide benefit back to the consumer? And how does that improve their lives or simplify their lives? Because if we can answer that, then we can create a product that has value back to them.
Fantastic. And then Mike Simmons, I'll just throw this back to you. The autonomous car, that's going to be another big factor of that it impacts mobility. What do you make of these answers?
Yeah, I think it's representative of how we're all thinking about it. Everybody, everybody in the space, I'm sure everybody's listening. Everybody that's listening is thinking the same thing, right? There's this massive disruption that's coming in the space, and it all points to, way down the road, this autonomous future. But I think the reality is that, for probably the rest of my lifetime, it's going to be this really interesting mixed modality environment where you've got all sorts of different models, and each one of those models is ultimately going to be powered by data, driven by data. And if you're not a digital, company at your core, you're not going to be able to adapt, right? Every big insurer out there is started as an analog company, kind of by definition, right? They're all decades or hundreds of year old companies. So this is new for everybody. And the folks that are focused on building out this capability and becoming a digital company are going to be the ones that are really ready for it. And the changes are massive, right? The four big pillars we talk about, of mobility disruption that are coming up: the connectivity, sharing, autonomy, electrification. Every one of them is enabled by data and being sort of digital at your core. So I think if you're not there, you're not going to be prepared for it. So I think that's why everybody's focused on it, and it's going to be it'll be exciting to watch going forward.
Fantastic. And then I'd like to offer this an opportunity to comment to Ali Safavi. So Ali, what do you make of these results? Are you sort of in agreement with the other panelists?
100%. I mean, integration with IoT, it's good. Flexibility is great. Resilience, it's something that I think it's less of a problem. But the biggest thing is that the world is changing, and the change is happening really fast. And I can't agree more with the other panelists that there's going to be a lot of new changes. And the thing about insurance and I don't come from an insurance background, that I learned was that everything affects insurance in one way or another because it affects risk. And the insurance companies need to stay ahead of the curve. They've been doing the business in the same way for hundreds of years, but now it seems like it's moving in a new direction, and that's the number one thing that everyone needs to be aware of.
And lastly, but not leastly, Gary, obviously a digitally-based company. What do you think of these results?
Yeah, when I looked at it, I think it's when I took the little quiz myself, that's where I ended up as well. But I think it's bigger. The adaptability part is bigger, and the digital-based insurance company, I think, is really it's an important thing to think about. When we look at these programs that we have rolled out for the Allstate Insurance Company or for Esurance, the amount of work that actually is doing the telematics part, the part that a lot of these conferences tend to spend time on, we figure is probably 20% of the work, because we were the same people that did the integration into claims and into the policy admin systems and into the commission systems, and all of that needs to be digital in order to go fast. I think us as an industry, telematic-wise, can go quite fast, but it's the understanding of how do you run the rest of your business digitally. So whether or not that's to roll out your UBI program, or is to roll out how we're going to integrate with ride sharing or autonomous vehicles in the future, the fact that you're starting to transform into being more digital throughout your entire business, it's just going to allow you to be many times ahead of those that are still struggling with the old legacy systems.
Thank you very much. We are really running a little over time, but I do hope the audience stays with us. We have one more poll question to launch, so we'll do that now. And the final poll question: what element of insurance business changes most with the advent of connected car data? So we're talking about the business element of connected car and what we're able to achieve. So customer touch points and relationship, is that the biggest element where we can see change? Could it be claims resolution, accident management and repair, or do we think there's something else that is going to substantially change? So we'll let the audience just take a moment to cast their vote, and we'll have another chance to offer our speakers an opportunity to make a comment on those results. To our listening audience, we're looking forward to a very, very full and exciting event later this year in Chicago, where you can hear from all of the speakers here today. So again, another opportunity to come and meet, do business, network, and learn something from our speakers, and you can do that at the event in Chicago. So I think we're just about there now. We can see the answers, and they are in. So there we go. Very, very clear, very clear winner in terms of what do we see as being change, customer touch points, and relationship. And in no particular order, I'd like to open this up to Ali from Plug and Play.
So this one, I do agree that customer touch point and relationship could be improved, but honestly speaking, I'm more of a fan of the fourth category, which is other, which I want to go back to the whole idea of the trend and the whole shift in mobility in general, which that impact I think is going to be a lot more bigger than customer touch point and relationship. Like in the next 5 years, if more services come out of OBD2 devices or dash cams, I think that's good. But in the long run, I think the whole shift of mobility as a concept is going to be a much bigger trend and much bigger impact on the insurance industry.
Fantastic. And then Marielle, how do you see this impacting the way that you do business with your customer?
Yeah, I mean, I think that definitely what Ollie said on mobility is going to be one of the bigger macro trends. I think that as far as the data that comes in, what happens with the customer, I think is equally as important. It will change how they buy insurance, essentially, on accessing, having it be less steps that one needs to take, using data that's available, being smarter, simplifying the process. So I think that definitely the personalization side of it and simplifying will be also a bigger impact moving forward.
Fantastic. And then I'd like to ask Gary Horgan with Arity. What do you make of this, and how do you see your customer relationship changing?
I agree that that's probably the broadest area. I think it's the closest one that we can see. What I didn't see come out of this, which I really believe strongly in, is the personalization or the control that the customer is going to have. They're going to pick and choose what type of insurance they want. There's going to be models and that they could, if they're driving less, sharing more, using share cars more, I think it's going to change their relationship with the insurer. But I think mostly it's going to give control to the customer, which is going to be fundamentally different than today, where I don't think the customers really feel like they have much control over what they're buying or how to buy it, other than just levels and limits. But I think we'll be able to see a lot of that. It's interesting that the accident side and the claim side looks so low. I do think there are opportunities there, especially with continuously connected type solutions, that there's going to be some amazing innovations that are going to come out of that. And when you look at the overall expense structure of insurance companies, there's some really big opportunities inside of that bucket. So I wouldn't be surprised if we look back at this in a year or two, that these results might change a little bit.
Okay, and just finally, Mike Simmons, Driveway. What do you take of these from these results today?
Yeah, I like Ali's point, but I'd say I'm 3 for 3 with the audience here. I think that's right. The customer relationship, I think, is the area that connected car data has the biggest impact to change. You think about all those, all the companies that are going to plug and play and looking for businesses to disrupt. They look a lot like the insurance business, right? The traditional insurance business was sort of built around a lack of engagement, and you send a bill once a year and you kind of hope your customer just stays there and doesn't talk to you. And that's just not a thing anymore, right? All those are the businesses that are getting disrupted by the startups in Silicon Valley. Building a business, on hopes that you're not going to talk to your customer and they're not going to engage is just, it's not a thing anymore. So you need to figure out a way to build show value to your customer, build an engaging customer experience. And I think that's what connectivity has shown its capability to do, right? You can start to bring transparency and fairness to the insurance equation and insurance pricing. I think that's been, it's not always that obvious, but I think that's fundamentally where the change has started. It's going to continue in the insurance business.
Okay, fantastic. So we have come to the top of the hour, unfortunately, but I'd like to thank all of our speakers and presenters for today. The webinar recording will be recorded and sent around to all of those who have registered, as well as an infograph with those poll results, so you can take that. So without further ado, I'd say thank you again to our audience and speakers, and hopefully see you all in Chicago for Connected Car Insurance USA 2017. Thank you very much.